Just in terms of the way we're seeing the markets here, I think there are two very important signals that that should be front of mind, or changes that should be front of mind in setting your portfolios. First and foremost, the 30-year bull market in bonds is over in our mind. The very powerful deflationary forces that we've seen in recent years, they are shifting very clearly now to more inflationary pressures building, and the shift towards fiscal policy in particular is very negative for bond yields. And so, all your bond proxies, we're now in a bear market. So the opportunity is to sell into strength. Today's probably not the day to be selling your Telstra or your infrastructure names, but you'd be using strength to reduce your exposure because those securities are in a bear market. That has implications, obviously, for valuations as well. Valuations were stretched before the Trump election, and now with bond yields backing up, the valuations look further extended, particularly for the growth names, and you've seen the weakness in the FANG stocks last night. But the other major change is really around the shift in the political landscape here. Brexit was a watershed. Trump is an earthquake. You're seeing a very clear reprisal against the political class here, the neoliberal political beliefs that have really set the agenda for the last 20 years, coupled with lower interest rates, have been very positive for markets. And we're seeing a shift there on both measures. And so the political landscape now has shifted profoundly. Politicians around the world are running scared. They will be embracing populist policies. They'll be spending like there's no tomorrow because there are more Trumps to come. And the political establishment are scared. So we're going to see a lot more spending. That's why, and we've seen the baton pass from monetary policy to fiscal policy. None of this is good for the bonds. It's obviously good for commodities and basic industries. That's why they're running. We believe this is a false rally, and we would be selling into any strength here, particularly if this rally continues. Ultimately, this change that we're seeing in the political leadership is very disruptive for markets. It creates enormous uncertainty. How's Trump going to deal with the tensions in the South China Sea when they're talking about trade barriers and the Chinese manipulating their currency and the like. I mean, the political tensions are going to build, and this creates a lot of uncertainty for markets. So we see this as a negative for markets longer term. The growth outlook has not changed. The question is whether they can spend enough through their fiscal policies to create growth, and we're dubious. We're not sure that is the case. So the growth outlook hasn't changed. Uncertainty's increased, and so I don't think that's good. And valuations are still very stretched, and looking more stretched with higher bond yields. So none of that's good for the markets. So we'd be looking at this rally as an opportunity to sell. In terms of the key positions in our portfolio, so just be very careful of the bond proxies. Use any strength to sell. Resources have probably got a little bit further to go, but again, I'd be careful there. China still consumes between 30 and 50% of most of these commodities, and these trade barriers are not going to be good for their external sector. I think that it's a challenge for growth in China, if anything. So we think the resource rally will run out of steam in the next couple of months. In terms of key positions that we like Fairfax. Listings are at a 20-year low, so that's just a good time to buy the Domain story. Domain continues to become more valuable. Listings are at a low ebb. APN Outdoor, it's a good structural story. The price is right down here, and they've upgraded the other day. Crown we like. We'll be seeing their setback in Macau as an opportunity to get involved there. And then on the mining side, Evolution we like also. In healthcare, just be a bit careful with healthcare. The US healthcare sector has been the worst performing sector in the S&P over the last 12 months. It's ripped in the last couple of days on the back of the Trump election because the Democrats were going to come down a lot harder on drug pricing. And the Australian healthcare sector has been soft going into this election and the expectation of that. But don't be fooled. these pricing pressures in the health space are coming through, irrespective of who won the election. CSL, as an example, half their revenues are out of the US. So they will be seeing these pressures. They're coming through, not to mention the pressures from biosimilars as they come through as well. So just be wary of any rally in healthcare. It's very expensive on a global comps basis, and those pricing challenges are definitely there. So that's just a quick synopsis of how we're positioned. I know with the changes you were interested in our views there. I would like to introduce you today to the Watermark Global Leaders Fund. It's Australia's first global market-neutral fund managed by an Australian manager. This slide is probably the money shot in our presentation. In market-neutral strategies, Australia has some of the best fund managers in the world, and we're proud to be one of that elite group. Elliston, Bennelong, Regal and Watermark have performed amongst the best market-neutral funds globally. There's 453 in Preqin's database, and we're in the top 5%. WMK, which Morgan's helped float 3 years ago, you can see is in the top quartile. Hopefully you can use that data to support the case there for WMK. So WGF, the new Global Leaders Fund, will be the same strategy but with global shares. We've got off to a great start. Let me see if I can quickly pull up that slide. We've got off to a great start. We changed our mandates 2 years ago, allowing us to invest internationally. And you can see here, the positive spread we've created. Our long portfolio up by 10%, our short portfolio down by 20%. This is a spread business. Long, short and market neutral is a spread business. We create value through a positive spread. The difference between our long portfolio and our short portfolio, what we call winners and losers. And you can see here over the last 15 months, we've created that spread, and our international portfolio has delivered a 23% return over 15 months. With that strong performance, we want to offer our investors an opportunity to invest directly in this strategy. So we're making a priority offer to our 13,000 investors in our existing LICs to take advantage of this new listing. Morgans are on the ticket. We're very happy to have them on the ticket. You've been great supporters of us in the past. You can see from the performance we haven't let you down, and we won't let you down with this one. Here are the key dates. The book is opened. The broker firm offer closes on the 2nd of December. Thanks everyone for your interest. We really appreciate it, and thanks for Morgan's support.